Also suffering from inflation, or battling it a little bit, Aspen Pharmacare. They've had a bit of a drop.
Yes, South African drug maker Aspen Pharmacare has reported a 15% drop in interim profit, citing inflationary pressures, supply chain issues, and a drop in COVID vaccine sales. The group says it has delivered a creditable and resilient performance under challenging trading conditions. We are joined now by Aspen CEO Stephen Saad to talk more about their performance. Stephen, thank you very much for your time this afternoon. Let's start with that story of inflation, inflationary pressures and the drop in sales having a discernible impact on your results. We've seen other JSE-listed companies also pointing to inflation for their financial performance.
Yeah, you know, Aspen is a global company. We may be South Africa's most global company in terms of subsidiaries. So we really struggle if we have global issues, and inflation has been a global phenomena. I think our bigger issues really were what's happened in Russia and Ukraine. We had R1 billion of sales in Russia, which have really dissipated. And then in China, we had lockdowns. Where the hospital simply locked down during COVID, and we have a big hospital portfolio. So we had a lot of global headwinds, and of course, I mean, we're all very well aware of what's happened with COVID. You know, there was a thought that COVID would last a period, but you know, at the end of the day, the COVID vaccine, we aren't making it anymore. So there's no more COVID vaccines being manufactured, and that's quite telling for us, more than even inflation or anything, is because you have all your expenses in your factory, and now we are really urgently trying to find other business to replace that business.
Stephen, are you on the same boat as other companies that are operating in Russia, that they can't repatriate all of those sales to South Africa and all of those profits?
We are able to repatriate. We have to work through China, so there's a Chinese bank that we work through to repatriate cash out of Russia, so we have been able to achieve that. The reality is that so much money has gone into the war that there has not been a real allocation to healthcare. So if I take some of our key products, one of our key products, and we haven't lost market share, but the market used to be, say, 50,000 packs before COVID. It went to 100,000 during COVID. It's down to 7,000 now. So massive drops, you know, as money is channeled out of, for example, healthcare and other public sector in order to meet the requirements for the war.
This is talking to that creditable and resilient performance that you have been operating under. Let's talk South Africa now in terms of the operating environment, with load shedding being the interest rate environment being one that we are not used to. How has the South African environment been for Aspen Pharmacare?
It's becoming more challenging. Because, you know, you import a lot of chemicals to make in your products in this environment. So you've got exchange rate pressure there. You have load shedding, which impacts not only your operations, but, for example, if you're supplying chemists or chemist groups or pharmacies, they have load shedding, which in turn impacts their turnover, or retailers. So there is a knock-on effect in it. So it's not an easy environment. That said, you know, we're seeing a real tough environment in many places, you know, particularly places like Europe, which aren't used to inflation, and suddenly they've got 8 or 10%. You know, for South Africa, you might go from 5% to 7%, and, you know, we want to strike and riot, and understandably, because that's a big jump. But try going from 0 to 9. So there are these issues globally at the moment.
Your manufacturing revenue also decreasing by 12% to about 4.6 billion rand, and that is due to those lower COVID vaccine sales. Where are you at this present moment with Aspen Vax? Where do you think COVID-19 will go, and what are your plans? Because the last time I think we spoke, you were winding down, or were thinking of winding down that particular business because of the low orders that came in.
Yeah. So our entire our manufacturing business turnover is down. It will be the biggest growth area in Aspen. So we've got a very strong second half projected, where we would sort of recover everything from the first half, be bigger than the first half and bigger than last year even. That's driven primarily out of manufacture. So our manufacturing business is onto a steep recovery. In terms of where we were with COVID, you were right. We told you we were winding it down. We did wind it down. Our COVID case was really premised on uptake in Africa, given Africa's low vaccination rate, but it just didn't happen. So what we've had to do is work really diligently. I mean, you can sit and cry in the corner and say, but you promised this and you promised that, we got nothing. Well, you've got to find, you get up off the canvas and you fight hard and you find something more. And, I think what you'll see in these results is that we have managed to sign significant contracts with major multinationals globally to utilize our sterile capacity, both in South Africa and our French facility. So we're pretty excited about that opportunity. It gives us a real growth path in the 2 to 3, into the sort of years to 1, 2, 3 years ahead.
Let's talk about the second half of the year, because these financial results are for the first half of the year. They're interim results. You've maintained your guidance to shareholders, even telling them that you expect the second half to surpass the first half of the year in terms of performance. What are you seeing happening in the outlook?
We had to make a decision. I mean, if you think about manufacturing, say you've got a line, you've got a product here that you can do 100 Rand of sales with if you run it, and you've got another product here which is a new product that if you put on the line, you're not going to get any revenue yet because you've still got to do all the tests and that. But in a year's time, it can do 1,000. We had to take that balance of immediate revenue versus revenue for the future to do all trials and tests. So we see in the second half less trials and tests than we had in the first half. And as I said to you earlier, those trials and tests have been very successful for Aspen, and that's what's going to drive our future revenue as well. So we've had this time last year we had very good set of results, but our outlook was very poor because the world didn't look like a happy place. Here we've had challenging results, but I think our outlook looks quite encouraging.
Stephen, thank you very much for your time this afternoon. I hope to speak to you in the end of the financial year. Stephen Saad is the CEO at Aspen Pharmacare, telling us that load shedding, inflationary pressures, and those low COVID-19 vaccine sales have led to that 15% drop in earnings for the half year that the company is in right now.